for those of you that follow the Dow theory, if the Dow does close above 12,743, according to Dow theory, that's going to be a bull market signal. Now, U.S. Treasuries are falling as stocks rally. The 2-year note is now poised for its biggest weekly decline since 2001. Joining us for a look at how this move affects the outlook for the Federal Reserve rate cuts, Ashraf Laidi, Chief FX Strategist at CMC Markets. Welcome, Ashraf.
Hi, how are you?
Good, thank you. Let me ask you, how relevant is what's going on in the credit markets right now? We saw this huge rush to the short end of the curve over the past several months. Indeed, is this just an unwinding of a lot of those trades?
Yeah, what's happening today, really, it's the planets seem to be aligned in favor of the bulls, and we saw actually starting late last night risk appetite improving. We saw a good, well, actually from last night we had a strong reaction, positive reaction to the very, very positive Google earnings. Then we came in today and the market took the Citigroup earnings in stride. And interestingly, when you were watching the market right after those earnings came out, if you look at the currency market, and you will see the yen was falling across the board very sharply. When the yen falls, there is an improvement in risk appetite. That is good for stocks. And as that improves, bonds basically go down, and yields go up, and the dollar go up. So what I've just given you here is sort of across-the-board market analysis of what's really happening. And as for the implications for the Federal Reserve, if you look at the 10 to 2-year spread, the spread between the 10-year yield and the 2-year yield is actually shrank to 160 basis points, is lowest in around 2 months. That really means that there is less expectations of further easing, and it does say that the Federal Reserve, it does call that the Federal Reserve may do only 25 basis points later this month.
Let me ask you, Ashraf, if we can, just to continue our conversation, I want to get some more detail on the yen. The Bank of Japan coming out and saying that the economy has worsened in 8 of the country's 9 regions. This is since January. Is that the reason, or can we attribute some of that to what's going on with the Japanese yen, or is this all ex-Japan driven?
Yeah, well, actually, this is very interesting. What has been driving the Japanese yen really had anything to do with Japan. You know, when we saw those previous gains in the yen, they had nothing to do with any good numbers or bad numbers from Japan. Currency traders are increasingly looking at what impacts risk appetite, and risk appetite directly impacts Japanese yen. What is
Ashraf, I'm just going to interrupt you for just a moment because we're going to take a break. We're going to continue more. Now, I am back with Ashraf Laidi. He is the Chief FX Strategist at CMC Markets. And Ashraf, I beg your pardon, I interrupted you. Just want to have you back up a little bit, talk about what is going on with the Japanese yen and the U.S. dollar, and why does the Japanese yen seemingly have no relationship to what's going on in Japan?
Well, because the Japanese yen, it has the lowest interest rates in the industrialized world, and basically it's been used as a currency. You sell the currency and you buy risk. What do you buy risk? You basically buy gold and you buy equities, and so that's why when we say, when the stock market is going up, we say that risk appetite is going up. You have an appetite for risk. Rather than buying something outright, you basically borrow yen and you buy higher yielding currencies, and you buy the sort of higher yielding, if you will, stocks. And when there is a risk reduction appetite, when there is a reduction in risk appetite, the money flows out of stocks, out of gold, and the VIX would go up, and the yen would go back up. So what we've been seeing now with the past 3 or 4 days, the yen has been falling across the board, and stocks have been up, and the yen has been down across the board, and the dollar has sort of been mixed. It's actually been up against the yen like everything else against the yen. But the dollar, I think it's going to have some more short-term gains ahead next week. So that's basically the summary with the yen.
Well, then let me ask you, Ashraf, Klaus Liebscher, he is the head of the Austrian Central Bank Authority. He's also on the council of the ECB. He's come out and said that it's not necessary that they can't rule out rate increases for the euro. Tell us about that, and also tell us about a survey that will be coming out next week that you say is key to where the euro is going to trade.
Yes, what Liebscher said is part of the increasingly persistently staunch anti-inflation rhetoric by the European Central Bank. And definitely their rhetoric is quite warranted, because we saw this week inflation in March for the Eurozone. It was revised from a flash estimate of 3.3 to 3.6. Guess what? Their inflation, their preferred inflation is at 2%. That's why we saw the euro rallying all the way to 159.80 at 20 pips away from the 160 level. That helped the euro. But then you have this tug of war between the politicians in Europe and between the central bankers. And the politicians came out and they basically said, you know, it is too high. You have to remember what we said in the G7 about excessive moves being undesirable. So that actually weighed just a little bit on the euro. But looking forward, really, Tim, is the IFO survey in Germany, and this business sentiment survey from Germany has been really, without fail, the main, it actually gone up for the past 4 months, and each time it has gone up, it has really pushed the euro by big figures. The question, will it be the catalyst that is going to send the euro towards 160? We probably think not. If it's going to be disappointing, the IFO, and I think it's about time, because it has been really surprisingly on the upside. If it is disappointing, Tim, the IFO survey in the middle of next week, it will really continue to erode the euro, or it will shed further ground from the euro. As we're seeing today, the euro is down across the board. However,
let me just interrupt you and ask you. We're just noting that crude oil, hitting $117 a barrel right now. Give me your thoughts on the relationship between crude oil prices and what's going on with the U.S. dollar.
The correlation between rising oil and a rising euro has been quite positive, or the inverse relation between a rising oil and a falling dollar against the euro has been quite astounding. But today is one of those days. Like I said earlier in the show, sentiment was improving. So basically, people sort of took in stride the Citigroup data, and the yields went up, the bond yields went up, and that helped the dollar.
All right, Ashraf, I beg your pardon. We're out of time. Ashraf Lahidi of CMC.